recording all the day-to-day business transactions, and only monetary terms will be expressing in the books of accounts. So bookkeeping is the initial stage where you will be recording the transaction systematically day by day, every transaction. So there will be numerous number of transactions, infinite n number of transactions in a business daily happening. Like you will be making sales, you will be selling your goods or some assets to outsiders, your customers, and even you will be purchasing, you will be paying lot of bills. So everything you will be having your invoice and vouchers. So you will be preparing bookkeeping. So here it is actually the work is entrusted to the junior level of staff in the organization, in the company. So they need not possess much accounting knowledge, but a person who is doing accounting, who is maintaining accounting records, he has to he must possess proper knowledge how to record all the business transactions in the books of accounts, how to post it in the ledger, and how to prepare financial statements or final accounts. He has to possess a good knowledge on accounting. He should know the basics and how to do all those things. But bookkeeping is that you just by verifying all the documents, all your vouchers, invoice, everything, you are going to just look it over, and just you're going to record all the transactions whatever is happening. So that is known as bookkeeping. Just to have a updated whatever is happening in the business, you're just going to make a note of it. So that is known as bookkeeping. So bookkeeping is the systematic recording of transactions, and it is usually entrusted to junior level staff in the organization. So why it is maintained is that on day-to-day basis, we must have an updated information. We must know what is actually happening in the business. So because of that only, we are maintaining this bookkeeping. The person who is taking care of that, he need not possess that much of accounting knowledge, or it's not. It's like a clerical staff work only. So that is known as bookkeeping. And next part of that is what is the difference between bookkeeping and accounting. So we must know these are the basics things which we must know before going in depth to the accounting subject. So what is the basic difference between bookkeeping and accounting? Actually bookkeeping, it is just going to, you are going to systematically record all the business transactions whatever is taking place. But accounting is that apart from you are going to record, you're going to record the transactions in your journal, then you're going to post all the transactions whatever you have recorded in the journal, you're going to post it in the ledger accounts. Okay, you are going to prepare a separate account for each thing, and then later on you're going to prepare trial balance, and after that you're going to prepare your final accounts, financial statements, everything analysis you are going to be. So it's a quite complicated one. It is a broader concept, but bookkeeping is not like that. You're going to just record whatever is happening in the business. So this is the considered as the primary stage, but this is not the primary stage. Accounting is the secondary stage, next step towards it. And next, what is the main objective of preparing bookkeeping and maintaining accounting is, what is the basic objective? You see, you're just going to systematically record all your business transactions, but you're here in accounting, main purpose, any business, they are going to prepare accounts only to know about their financial position, what is now current situation of that company, what are their earnings, whether they are earning profit or incurring loss, what is their net effect on the at the end of the financial year, that is 31st of March. So that is the main motive of preparing accounting. But bookkeeping is just you're going to systematically record whatever transactions daily happening. So that is only the main target of bookkeeping. And this is, as I said, routinely they will be doing, and it is a clerical in nature. Okay, so they need not possess good accounting knowledge. But accountant, those doing that work, they are known as accountant. He should know which entry has to be debited, which much is has to be credited, how to record the transactions, where you have to post everything. He must possess a good analytical knowledge, and he should be an executive in that work. So you should know basic accounts, everything you should know there. Okay, so ultimate aim, because we need to know whether we are earning a profit or loss. So that is the main aspect of preparing books of accounts. So that is the nature. And who is doing that work, all those things? The person who is doing is bookkeeper here, and here the person who's maintaining books of accounts is known as accountant. And they are the junior level staff, clerical level staff. Here they are accountant, they are comparatively executive type. Okay, so the here the bookkeeper, he need not supervise the work of the accountant, because he is a junior level staff in the organization. But accountant is that he can check the work of bookkeeper, whether he is maintaining all the transactions, day-to-day business transactions in a proper manner or not. He can have a check over on that. And next, if you see the regarding the staff involved here, junior level staff, here senior level staff will be maintaining the accounting records. So this is the basic difference between bookkeeping and accounting. So I think now you would have understood what is meant by accounting and what is meant by bookkeeping. So accounting, it is a process like that. So we have several stages in that. So first stage will be recording, and then posting, and then summarizing everything. Finally, you have to arrive the results. Okay, so but bookkeeping is just only you're going to record all the day-to-day business transactions. So that is the basic difference between bookkeeping and accounting. So next we are moving on to the branches of accounting. So this is a new topic. So branches, if you see, actually 3 branches are there. So one is the financial accounting, and the second one is management accounting, and the third one is cost accounting. So what is meant by financial accounting is that here you will be recording only the financial transactions. One which are non-financial transactions, you have to ignore them. Okay, only monetary aspects will be recorded here. So you should not consider the capability of an employee, or the ability potential of him, or his attitude, behavior. Nothing we are going to record here. Only one which you can express in monetary aspects, monetary terms, in money, financial nature, that only will be recorded under accounts. That is financial accounting. So here you will be preparing the profit and loss account, trading account, profit and loss account. Both the thing you are preparing to know the net effect of profit or loss. Net profit or loss you want to know. Okay, and then the balance sheet. So why you are preparing the balance sheet? Your ultimate aim is to know whether they have the assets and liabilities on a particular data. So what is the position, financial position of the business? So what is their assets in the business? What are their liabilities? So assets is that the property that is owned by the business, and liabilities, the commitments which has to be paid by them, either in short term or in a long term perspective. Long term in nature, it can be anything. So financial accounting is basically you're going to prepare the financial statements, and you're going to project about the financial position of the business, and you're going to consider only the monetary aspects. So just non-monetary items, or one which is not of financial nature, you're just going to ignore that. So that is the financial accounting all about. And next, moving on to the management accounting. So already you would have prepared all the financial statements. You would have prepared a balance sheet, everything. So only preparation of balance sheet or publishing the balance sheet will give nothing to the business. Only if you use all those data, and if you're going to make some analysis and interpretation, you have to compare, you have to verify, you have to use those data, and you should give some information to the interested people, right? From these stakeholders, yeah, it can be a shareholder, it can be a shareholder or government or tax authorities, even to the top officials of your company. You have to give those data after making analysis and interpretation, so that they will be making some decisions out of that. They can plan about their future. So here you'll be calculating ratios, you'll be preparing fund flow statement, cash flow statement, budgets, all those things you'll be preparing, and you'll be utilizing whatever data is already available. You are going to just utilize those data, and you're going to make some analysis and interpretation out of that data, and you're going to submit it to the top management officials, and they are going to make some decisions out of that. So that is known as management accounting. And cost accounting is that you're going to, in order to reduce your cost of production, you're going to maintain this cost accounting in your business. So the main purpose, manufacturing related things you are going to consider here. So whatever the your cost of production, you just want to reduce that. You want to minimize wastages in your business, defects in your business. Your cost of producing a product has to get reduced. For that purpose, you're going to prepare the cost accounts, and you want to just maximize your profit. For that purpose only, cost accounting, to have a control over your business, you're just going to prepare this cost accounting. So these are the three branches of accounting. Hope all would have understood what are the three branches of accounting. So next we can move to the objectives of accounting. So what are the objectives? What is the purpose of preparing accounting? So first, if you see, you have to maintain day-to-day business transactions. So that is the main thing. Okay, if you don't just record whatever is happening in your business, you don't know how much stock you have in your hands, how much you have sold out, or how much you have earned at the day end or the month end, whatever might be. You don't know what is actually exactly happening in your business. You wanted to know, you wanted to have a control over it. So you have to maintain proper accounting records. That too, if the company, if they particularly if the companies that are registered under Companies Act 1956, they have to properly maintain their books of accounts. So that is very, very essential and a mandatory thing that has to be maintained by every business. So in order to have a check over whether you have incurred a loss or earned a profit, what are your income, what are your expenses in our day-to-day life itself. We will be will be whatever the income or the salary, whatever we are earning, we just have a control. So how much we should spend for our grocery items or cosmetics or other entertainment or something, we just have a control over it. We want to reduce our expenses, that will be the main aspect. Then we have to save something and we have to invest. All these motives will be there generally for the people. So similarly, even business, they want to have a check over. They want to know what is exactly happening in their business. Only if they maintain proper books of accounts, they can have a control over over their expenditure. They can have a control over their wastages, reduce all those things in the business. Proper investment can be made in the future. Everything is dependent upon only if they maintain a proper books of accounting. And next, if you see, for to know about their profit or loss at the year end, so they need to know their profitability position. So for that purpose only, we are maintaining the books of accounts. So trading account is prepared. Here, then profit and loss account is prepared. Everything is prepared to know about the net profit or net loss of that business. Then only balance sheet we will be preparing. And what you are going to get out from all these financial statements or balance sheet, everything, the main thing is financial portion. You want to know where we are standing, our business is growing or what it is happening. So you want to know about that. So it depicts the financial portion of your business. And then next, most important thing is there are some people who are internal users and some people are external users. Internal users are those who are within the company. If the company is going well, then employees, they will be getting their normal usual salary or hike they will be getting. And shareholders, if the company is going well, the shareholders, they will be earning good return, good dividend they will be earning from the company. Like this, there are certain people who are within the company, they are known as internal users. Similarly, some people are external users, like the government the government, they want to know whether this business is going doing a legal business, a proper manner, if they are adapting proper legal formalities and everything, they are maintaining a good thing, they want to know. The government is also interested because whether the company is running for the public welfare, or they are providing some hazardous to or creating some harmful effects on the public. They want to know whether this company is going well or not. And customers, they want to know about this company, whether they can produce a good quality product or not. They want to know about this company. And investors, some people are potential investors, they will be, so they might be interested to invest in our company. So those people also, they look in for the financial statements which are published by that company, whether we can invest in this company, whether it is going in a good manner or not, whether the business is in a recession period. So all those things, even the potential investors who are external people also, they also interested to know. Then the tax authorities, whether this business is producing proper books of accounts, whether true profit is shown, okay, whether true financial position is shown by that company, tax for charging the tax, everything they have to look over. So people, there are stakeholders who are interested to know about the company's welfare. So they wanted to know about the company. If you maintain proper books of accounts in your business, then it will be helpful for both the internal people as well as for the external people to know about your company, to know about your company's financial position, your company's profitability position, everything is known. So whether you are in a good solvent position means whether you are capable enough to pay all your loans, pay all your debts or not. Or if you are in an insolvent position, so if you go in for bankruptcy or insolvent, so you are running out of loss, or if you are not capable enough to pay your debt or loan, your assets are not that much worth, everything is known with the help of financial statements to the stakeholders. They come to know about your business only if you maintain proper books of accounts. And it helps in decision making and control over the business. Whether your financial statements, if it is proper manner, if you are recording everything, then ultimately it will surely help you in decision making, in planning, whatever your functions of management, everything you can apply here also. So you can make proper planning, you can prepare budgets, everything, proper control over expenditure can be kept, your cost of production, everything you can reduce, you can increase your profit, you can increase your market share, everything is possible only if you maintain proper books of accounts. So you should know how to show your expense, how to reduce your expense, everything can be have add a control over. And you can make a proper decision making, where to invest your funds, in which projects you can invest, everything you will come to know. Okay, so that is the basic objectives of accounting. So far we have discussed about, so what is meant by bookkeeping, what is meant by accounting, what are the differences between bookkeeping and accounting. And next thing, what are the objectives of accounting, and what are the three branches of accounting. So next, from this you have to carefully listen, then only you will be understanding basics of accounts, as well as for moving to the next thing aspects for everything. You need to, and yes.
Ma'am, 1 minute, ma'am. Sorry for the interruption. Ma'am,
Yes.
after finishing class, can you send this PPT in WhatsApp group, ma'am?
Sure, sure. I will send you.
Okay, ma'am.
Okay.
Thank you, ma'am.
Okay, okay. Next is that types of account. So usually many people who are from commerce background, you might be knowing this familiarly, but even then I will explain it to you. So please listen carefully. Suppose if you cannot understand also, you can stop me and ask doubts. Okay. So what are the types of account? From this only our accounting is subject is coming in depth. Okay, so basic thing which we must know about this. So what are the types of accounts? So types of accounts can be classified into personal account and impersonal account. Okay, so personal account is one thing and impersonal account. So personal account is again classified into natural personal account, artificial personal account, and representative personal account. So personal account means, first let me tell out, it can be a natural person. Like if I am starting a business and I'm running my business, I will be having lot of transactions with many people. Okay, so I'm a company running like a XYZ Limited, something I'm company I'm running now means I will be having dealing with A or B or C. Some people I may purchase from him or I may sell to him. So whatever might be. So natural personal account means if I am having dealings with say Ram or Ravi or some people, person's name. Okay, so that is known as natural person. Okay, I may purchase from him or he might purchase from me. Okay, I may sell out to him. Okay, so whatever might be, natural personal account means if I am having dealings with natural people, then that is known as natural personal account. Okay, and then artificial personal account. So what is meant by artificial personal account is that I might have dealings with the company. Okay, instead of individual people. If individual people means it comes under natural person, but I might have a dealing with the any company. Okay, so ABC company or some other company, whatever might be. So I might have dealing with a firm or a company. Okay, or I might deposit my amount in bank. Okay, so bank, some Indian bank or IOB, whatever bank it might be. So some banks also I might invest my fund, deposit my fund. I might also withdraw from that from bank account. So like that, artificial person account means bank account or the firm's any company account that comes under the artificial personal account. And what is meant by representative personal account? So representative personal account is that it is like outstanding expenses and then prepaid expenses, accrued income, income received in advance. Let me explain each thing in depth now. Okay, so these all comes under representative personal account. So representative personal account, under that four aspects are included here. So what are the four aspects is that first one is outstanding expenses. If particular year you have to pay the salary to an employee, but you are not going to pay, you are going to use his service in the business in your company, you are availing his service, but you are not going to pay him now. So that is known as outstanding expenses. It can be outstanding rent or outstanding salary, anything it might be. Okay, so outstanding expenses will come under representative personal account. And then prepaid expenses. So prepaid expenses means like sometimes we may pay in advance, like insurance premium we might pay next year, you might pay now itself, or rent you may pay earlier. Whatever might be, if you are paying in advance, now you are not going now you are not going to utilize or avail that, but you are going to pay previously. If you are going to pay means that is known as prepaid expenses. So one is outstanding expenses, other one is prepaid expenses. Outstanding expenses means you are going to avail the service now, but payment will be made in future. It will be due, like salaries due, all those things. Outstanding expenses. Prepaid means before availing that service itself, you are going to pay them in advance, means that is known as prepaid expenses. known as prepaid expenses like insurance premium. And then accrued income. Accrued income means you would have done a service to the outside people, but for that income you would have not received now. So that is known as accrued income. Accrued income means you would have provided the service to the outsiders, but the payment for that you would have not got in your business now. So that is known as accrued income. Sometimes it is referred to as outstanding income also. Okay, so accrued income, outstanding income, both are same. And then next is income received in advance. So before giving the service itself, you are going to get the amount in advance, like commission received in advance, discount received in advance. You would have got the amount for that, but you would have not given the your service to them. That is known as income received in advance. So representative personal account means all these things will come into picture. So outstanding expenses, prepaid expenses, and then your accrued income and income received in advance. So all these things will come. So personal account means it can be a normal individual person. The business may have dealing with a normal individual person. I'm a limited company. I might have contacts with B or C. He might be a natural person. If I am having a commitment or a dealing with the firm or other company or bank, then that is known as artificial personal account. And representative personal account means, so now just now I said all that four things will come into picture. And usually capital drawings account, capital account, all the thing it will come under personal account only. So capital account, drawings account will come under personal account only. So that we can go later on in depth what is meant by drawings, all those things we can just look it over afterwards. Then moving on to the impersonal account. Impersonal account is that one is the real account, other one is the nominal account. So what is meant by real account? Real account actually it is inclusive of tangible real and intangible real. So what is meant by tangible? All the tangible and intangible things will come into real account only. Okay. So tangible, what is meant by tangible? Tangible means here you can see it over, you can touch, you can do whatever you want. Okay, so if you see the machinery that you install in your company or the furniture that you have for your business, all you can see with your eyes, you can touch it. That is known as tangible thing. Okay, tangible assets or tangible real account, in that only tangible will be coming, tangible assets. Okay, so cash you can see in your hand. Okay, the furniture that you have in your business or the plant machinery, the building you construct, the building you have, that you can see with your eyes. So whatever which you can see, you can touch, that is known as tangible real. Okay, so tangible assets also you can name it as. And intangible assets, intangible real. Okay, so what is intangible is that you cannot see with your eyes. You can just realize that. You can just feel. You can just realize, but you cannot touch or you cannot see in your eyes. You can just only feel. Okay, so that is known as intangible. Okay, so the reputation built by your company, you cannot see that. Okay, so if you have a good reputation, recognition from your customer, you can just feel that, you can just realize that, but you cannot see that. Okay, so a good brand image created by you in the mindset of the public, in the mindset of the customers, that you can just realize, but you cannot see with your eyes. So that those things like goodwill, patent, copyright, all those things, trademark, good trademark, all these things you can feel or realize, but you cannot touch or cannot see. Okay, so you have done a creative work, like artistic, good artistic work, you would have obtained copyrights for that. Okay, so if you have composed music, or it is an good painting work or artistic work, or if you have published a book or something, that those things will be given a copyright. Why those rights are given to you? No one can have the right over it. No one can copy that. No one can do exactly whatever you have done. No one can do that. So that right you are going to possess. You can just realize only that. You cannot see, or you cannot touch that. So goodwill is that good reputation built by you. So it can be only realized. You cannot see that. Okay, so the goodwill, and then copyright, patent right. If you are producing a new product, if you have made a new invention or a new method of production, in production itself, if you have made a new method, you have adapted a new method for producing your product, then those things will come under the intangible thing. So intangible assets, under that only you will be getting that. So real account means all the tangible one and intangible one. Tangible assets and intangible assets both will be coming under the real. So real account means it is the assets of your company. Okay, so whether it is coming inside the business or whether it is going out of the business, that only you're going to record in your books of accounts. If you're going to purchase your machinery, so machinery will be coming into your business. What will be going out of your business? Cash will be going out of your business. So that only we are going to make as journal entries, all those things. Okay, so it's a simple thing. Okay, so if you're going to buy a product, any product, durable product or mobile phone, whatever might be for your home, for you. Okay, so what is going out from your hand? Cash is going out from your hand. Okay, and in return what you're getting, a mobile phone or TV, whatever might be, you're getting that in to your hands. Okay, so just like that you have to think over, and you have to make transactions, you have to record your entries there. That's it. So real account means you are going to include all the tangible, real, intangible thing. Only the assets are going to come into picture here. Similarly, if you are going to sell an asset here, if you are going to sell means what is going out? Asset is going out. What is coming in? The cash. Whenever you have sold, the cash will come into your hands. Okay, so that is the real account. Real account will be recording only those things, those aspects. And what is the nominal account? So nominal account is that here two aspects we are including, expenses and incomes. Similarly, gains and losses. Okay, so expenses, what is meant by expenses? If you are going to pay salary to an employee, or wages to the labor, or if you are going to pay rent, if you are going to pay for the electricity bill, whatever might be, those are known as expenses. As usual, our normal households, whatever we are making some payments, like that only expenses are. Okay, from the point of view of business, we are going to consider here. And next thing is the income. Income is that whatever you are going to earn. So those things are known as income. If you have made a purchase, and if you have paid properly to that particular person, since you are making prompt payment, he may give some discount to us, some commission he might give to us, some discount he may provide to us. Okay, so those things and all will come under the nominal account. So if you are going to pay salary, or if you are going to pay rent, then electricity bill, etc., wages, all those things, that will come under the expenses. So income means if you are going to receive any discount, or if you're going to receive any interest, if you are maintaining bank account, if they are giving you interest, that comes under the nominal account. Interest received, discount received, commission received, all those things will come under the income. Expenses means whatever you are paying. So what are the two aspects just now we have saw? One is the expenses, other one is income. And the third thing is gains, profits, gains. Okay, so whatever you are earning, if you are selling and if you are earning profit out of that, then that is the gain. And loss, if you are selling at a book value lower than that, if you are going to sell anything, so that is known as loss. Okay, so or if fire has occurred to your factory, so due to that you have incurred some loss, or theft has happened in the business, so due to that you have incurred any loss, All those things will come under the nominal account. So nominal account means whatever what it will come under that means your expenses, your income, your gains and your losses. So four things will be coming under the nominal account. So these are the types of account. So types of account under that, one is personal, other one is impersonal. Personal, natural personal, that is normal individuals where you will be having dealing with them. An artificial person is that like some companies, some firms or some banks, if you are having dealings with them, then that is known as artificial persons. And what is meant by representative personal account is that your outstanding expenses, your accrued income, your prepaid expenses and income received in advance. So those things will come under the personal account. Okay. And even capital account, drawings account, those also will be considered under the personal account only. Capital means one you contribute initially. If you are starting up your business, you are contributing no one amount, that amount is known as capital. And drawings means whatever you are going to take it for your personal use from your business. So that is known as drawings account. Okay, so everything, one thing we should keep in our mind, everything is not every transactions whatever you are making you are going to record in your accounts, but you are going to record the accounts only from the point of view of business, not from the individual person. Okay, so the individual person should be left. Only from the business perspective you have to record all the transactions, not from the individual. So anything if you are withdrawing even for a personal use will be considered as drawings only. Okay, so, you are taking for your personal use. So business is separate and the person, the proprietor, the person who is the owner, so he is different. So both should not be linked together. So that is one concept is also the separate entity concept. So that's what. So personal account is this. Capital account, drawings account, everything comes under the personal account only. And impersonal account under that real account and nominal account. Real account, all the assets, assets is coming into the business or assets is going out of the business. Cash is coming or cash is going. Machinery is coming or machinery is going out of the business. Like that only we will be recording. Okay, so tangible and intangible will come under this only. And nominal account, your expenses, and expenses means the payments which you make to the outside people. Income, whatever you receive from the outside people. And your gains, whatever profit you are making from your business. And losses, whatever you are incurring due to a theft or fire or due to normal operations business itself, if you are suffering any loss out of it, everything comes under the nominal account only. So these are the types of account. This you have to remember. Okay, so personal account, actually we will be knowing as personal account, real account, nominal account. So if somebody asks you what are the types of account means, you can just in depth you need not go. Personal, real, nominal, these three aspects we must know. As a accounting student we must know that there are three types. One is personal, real, nominal. This three, if you know also, it's okay. It's fine only. Okay. So in depth, if you want to know means all these things you should know. Personal, real, nominal. These things, if you know also, it's well and good. So these are the types of account. So this is very, very important. Golden rules of accounting where most of the people will be knowing this. So golden, from this only our accounting is moving to the next level. Okay, so what is golden rules? What are the golden rules of accounting? So as we spoke earlier, three types of account. One is personal account, other one real account, other one is nominal account. So these are the three types of accounting account. So in this rules has to be adapted. Okay, why whatever the first step itself, journal. Okay, so first step what we are going to do in our accounting subject is the journal we are going to record. Okay, so that first step you should know what is the rule we have to adapt for making the entry. So one is the personal account. In that, debit the receiver, credit the giver, Receiver means who, giver means who you know. Okay, so receiver means one who is going to receive that benefit. Okay, giver means who is going to get that benefit. That is known as giver, receiver and giver. So the rule what you have to adapt is debit the receiver, credit the giver. Okay, so if I am going to pay to if I am A, okay, so I am going to maintain books of accounts now. I am A, okay, I am going to pay to Y or some person. Okay, so Y if I am paying, okay, Y or X whatever might be. So if I am paying to him, then X will be the receiver or that Y will be the receiver now. Okay, so debit the receiver means I have to debit that person name. Okay, so if Y is going to receive that amount from me, then I have to debit Y account or X account who is going to receive. So I am the A limited. Okay, so I am going to maintain my records, books of accounts I am going to maintain. So debit the receiver means if I am paying on a particular day, I am paying. Okay, okay, then I have to debit Y account only. Okay, and credit the giver. If suppose if I am going to receive from him, okay, so if Y is paying to me, then how I should record my entry. So Y account has to be credited. Okay, so Y account, Y is giving to me, then Y account I have to credit. So that I will be explaining while solving our problems. Okay, so debit the receiver means if somebody is receiving from me, I will be debiting his account. Okay, is or her account. Credit the giver means if he is paying to me, then I will be crediting his account. Okay, so that is the personal account rule. Just remember this one: debit the receiver, credit the giver. And real account, moving on to the next one. So debit what comes in, credit what goes out. Real account rule is debit what comes in. What is coming? If I am going to purchase a machinery or purchased a furniture, whatever might be. If I am going to purchase a furniture, take for example, what is coming? Furniture is coming into the business. So what I should do? Furniture account I have to debit. Debit furniture account there. Okay, so if I am selling that furniture, then I have to credit that furniture. Okay, so like this only I have to record entries in our books of accounts. So debit what comes in. If I am going to purchase a furniture, this is on a particular date, it is happening in a business. Take for example on 5th December or something one date, I'm going to purchase a furniture rupees worth 5 lakh or some 50,000 like that, or 10,000 around like that. If I'm going to purchase a furniture for my business, then what is coming? Furniture is coming into my business. So what I should do? Debit what comes in. Furniture is coming in. So furniture account I have to debit. Now, what is going if I am purchasing furniture? Ultimately, cash is going out of my business, worth 50,000 or something, whatever might be. Cash is going out from my business. So, what I should do? Cash account I have to credit. Okay, so this is the same thing for applicable even for sales. If I am going to sell a machinery or sell a furniture, so if I sell a machinery, machinery is going out of my business. So what I should do? Machinery I have to credit. Credit what? Goes out. A machinery I have to credit there. Okay, so what is coming if I sell machinery? What is coming into business? Cash is coming into business. So debit what comes in? Cash is coming in. So cash account I have to debit, and for machinery account I have to credit. Okay, so like that only we'll be making entries. If you remember this rule, you whenever we are going to solve the problem, you can just understand. Just memorize this rule alone. Okay, and nominal account, debit all expenses and losses. So nominal account rule is that, so already I said what all things will come under nominal account. Okay, so like a salary, rent, if you are going to pay, okay, and all those things, interest if you want to pay to a bank, if you have taken some loan, interest if you are paying to the bank, then commission if you are paying to any person, like that. Any expenses if you have, that it should be debited. Debit all expenses and losses. if you are incurring some loss, then that also has to be debited. If you are paying salary, take for example, if you are paying salary to an employee, salary account has to be debited since it is a nominal account and it is an expense. So accounts you have to know the logic first of all. So why which under which account it is coming actually. Okay, so that we must identify first of all. Okay, whether it comes under the personal account, it comes under the real account, or it is coming under the nominal account, first you must be clear with that. Okay, so if I tell salary to you, salary means whether it comes under personal account or real account or nominal account, first you must be clarity with that. Okay, and then only you can find it, identify whether it has to be debited or whether it has to be credited. You can then only come to a conclusion. Okay, then only this accounting rule everything will come. First you have to know. Okay, so either it is a personal account or a real account or a nominal account. If I say some person's name or bank, if I say, then it comes under the personal account. You must know it comes under the personal account. And if I say cash or some machinery or some furniture like that, then you must automatically it should come under your mind that it comes under the real account. Then only it has to be debited or credited. That all things after that only we have to think over debit or credit or whatever might be. Okay, so similarly you are also in nominal account also. You are considering expenses and losses. Whatever expenses, if you are going to pay salary, then salary will be debited. If you are paying interest, then interest account has to be debited. Similarly, if you are going to earn some interest, if you are going to receive interest from the bank, then interest account has to be credited there. Okay, so you must know first whether interest comes under personal or real or nominal. First you have to identify that one. After identifying that also, it may come under a debit or it may come under a credit, whatever might be. Okay, if you are paying salary, debit. If you are going to receive rent or receive commission, then you cannot debit commission account because it is an income. Income means you have to credit. Okay, so if you are receiving interest, if you are receiving discount, if you are receiving commission, it comes under nominal account only. But it comes under debit or credit, you must know to identify, differentiate between these two. If you are paying means it is an expense, then it will be debited. If you are going to receive that one, receive commission or receive interest or receive rent, whatever might be, if you discount or something, it is an income for you, then interest has to be credited there, not debit. Okay, so that you must be clarity. So first of all, before going into journal, you must thoroughly know this golden rules of accounting. First, any account, if I give just a person's name or a bank, IOB, Indian Bank or something, you must know it comes under the personal account. Then only you can identify whether it is to be debited or credited, that and all thing. Okay, and real account, take for example, if I'm saying cash, it should suddenly come to your mind, it comes under the real account or machinery or furniture. Okay, an asset, whatever might be, real account, cash, everything, it is real account. If I am telling about rent or interest, suddenly it should come in your mind that it is a nominal account. Then only you are going to receive interest or pay interest. Based upon that, you will be either debiting that or crediting that, based upon that only. Hope this golden rules of accounting will be clear to all, I think so. So next I am moving on to the double entry system. So basically debit, credit, these two aspects we must know. Okay, double entry system of bookkeeping, accounting. Okay, so actually there are two methods of recording the transactions. One is a single entry system, based upon some kind of business will be maintaining. Some business they will be maintaining based upon the double entry system. Okay, most of the business will be adapting double entry system. Why they are adapting double entry system is that proper books of accounts will be maintained there. true your financial position will be known through that. So most of the two companies which are got registered and Companies Act, so they have to strictly adopt this double entry system. Single entry system normally usually it is maintained by the sole proprietor, small level of business, those who are doing grocery stores, like that kind of business, not on a large scale level. Those business they usually maintain single entry system. Okay, so usually they will be adapting double entry system. So what is meant by double entry system is that every transaction, daily transaction only we are going to record in our accounting books. Okay, so like that, every transaction there should be one account should be debited, one account should be credited. Okay, if you are going to pay salary, salary is going to the employee, cash is salary, cash is moving out of our business, so cash is going out. Okay, and the salary account has to be debited. Like this, we will be having two aspects, one is debit, other one is credit aspect. So one transaction means two account will be there, one has to be debited, other account has to be credited. So what is this debit? Debit aspect means benefit receiving aspect. Credit aspect means benefit giving aspect. Okay, so benefit receiving, cash you may receive. Okay, so cash if it is coming into the business, or cash is going out of the business, a machinery coming into the business, then if you are purchasing machinery, then machinery you should show that machinery is coming into our business. What is going out? Cash is going out of your business. Like that, every transaction there should be two accounts. One has to be debited, one has to be credited. Okay, so if you are selling old furniture, then furniture is going out of the business, you have to reduce the value there, value and show, then only you can find out true profit or true worth of your assets. Okay, so furniture if you are selling means furniture is going out of the business, so okay, you have to reduce the value and show, then only next time furniture value will not be shown in the same amount. Okay, so furniture is going, so it is going out of your business. What is coming? Cash is coming into your business. Okay, so cash account has to be debited there. Like that, so every transaction you must have two aspects. One is the debit aspect, which is benefit receiving aspect, other one is credit aspect, that is benefit giving aspect. So that was the rule. So every debit there must be an equal and corresponding credit, every credit there must be debit. So if you are debiting means you must have a equal corresponding credit. If you are crediting any account, then similarly it should have an equal and corresponding debit. So this is the double entry system rule, and most of the business will be adapting this double entry system. The two limited companies got registered, they have to compulsorily, in order to provide, what are the benefits of that is, for tax authorities they believe in double entry system only, rather than single entry system. And government and shareholders, other people, stakeholders, everyone, they believe only on the double entry system of bookkeeping, or when they adapt only this kind of system in their business. And even for comparison purpose, last year what is your profit, this year what is the profit, exactly everything is known, pakka everything has been done only if you maintain your books of accounts under double entry system, not single entry system. Only small kind business, small scale level business, sole proprietors, like that, very small amount, meager amount of capital with that business is operating means they don't have large number of transactions, or large number of dealings will not be there. So those people only will be maintaining books of accounts under single entry system. Many business they will be maintaining their books of accounts only based upon their double entry system. So double entry system means, suddenly your mind has to come two aspects, one is debit aspect, other one is credit aspect. So debit aspect mean benefit receiving aspect, credit aspect mean benefit giving aspect. And every debit there must be corresponding equal amount credit we should give, and for every credit there should be a debit with equal and corresponding amount we should debit. So debit and credit aspect will be coming under the double entry system. Okay, so far we have discussed what are the types of accounts. So we must know what are the types of accounts. Okay, so one is the personal account, real account, nominal account. These three things, if you know also, it's well and good only. Okay, and these three, personal, real, and nominal account, and what are their rules? We have to adapt while recording the transactions in your ledger, journal. So that is the first step. Journal is the first step in our accounting cycle. Then only ledger, all those things will come next to it. So initially for recording transaction in the journal, only if you know this golden rules of accounting, then only you come to know. And whenever if you are given any kind of transaction, in that first you have to identify whether it comes under personal account or real or nominal, and then which account has to be debited, which account has to be credited. Those things you must know. Okay, then only you can better record your transactions in the journal. So types of account, golden rules of accounting, double entry system means what we have come across, and objectives of accounting, why we are preparing accounting. All those things comes under the theoretical part. Branches of accounting, all these will comes under the theory part. And bookkeeping and accounting difference, what is both aspects are, everything will come under the theory only. Okay, so these are the thing which we must know as a accounting student. We must know all these things. Okay,